Hi there. Welcome to Prices at the Pumps. I'm Scott Squires, pleased to be joined each week by energy expert Dan McTeague. Dan, we'll wade into a few things in a few moments, but first up, consumers want to know where are prices headed at the pumps, home heating, fuel, etc., in this region the next day or so.
Well, Scott, depending where you are in Atlantic Canada, prices are going to fall in Newfoundland tomorrow by about 4.5 cents a liter for gasoline and for diesel. But if you happen to be lucky enough to hold on the extra day, so that would be New Brunswick, PEI, Nova Scotia, you're going to see prices drop even more than 4.5 cents a liter, more likely 6, maybe even 6.5 cents a liter. And it all depends on how badly the markets perform today. So my best advice would be hold on, because you're going to save on a tank full of gasoline in Newfoundland. If you're filling up 50 liters, you're probably going to save a few bucks, and even more so in the rest of Atlantic Canada. So certainly unexpected this time of year. We start to see prices moving up, but the world is in a real funk right now, and there's talk of a major rout in the banking sectors around the world.
It's interesting because, we've used the term, or I've used the term chatting to you before over the weeks and months that we've been chatting, but a roller coaster for consumers. The price is up, the price is down, it's up, it's down, it's up, it's down, down. Last week, it was up. Now you're saying this week down. What's going on, Dan? What's causing these kind of wild fluctuations that we've seen the last few weeks when conventional wisdom would say, we should see it steadily going up right now?
Yeah, well, markets are completely decoupled from the fundamentals of supply and demand. Demand for gasoline and other products has actually increased globally, especially in the United States. China has finally emerged from its lockdowns. That in mind, you should start to see prices moving up in tandem, but we're not seeing that. Instead, what we're seeing is a focus by the markets, who are extraordinarily nervous with U.S. Fed moves on raising interest rates. That's what sort of kept energy prices in check last week. Then Friday, noticed that a couple of banks in the United States began the process of becoming rather insolvent. And so we now see today Credit Suisse following in that. There may be many more. There appears to be a contagion issue now in the banking sector. It has energy markets more nervous than perhaps any other market. We're seeing energy and oil in free fall, so much so, Scott, since last week. Oil's dropped about $11, $12 a barrel. That's certainly not something you'd see for this time of year.
Yeah, you and I were talking before we started recording about that most recent dip in the price of a barrel of oil. And I commented to you that seems to be a fairly large percentage drop in the price of a barrel.
It is.
Have you seen something like that in recent times?
No, but it does remind me of 2008 and the breakdown in the economic, the global structure that we saw with the world meltdown that brought about substantial declines in the value of everything, notably fuel. But that was structurally followed, a significant hike in the value of just about everything, notably oil. And people were panicking over $1.45 a liter back then. Of course, we're much higher than that today, and we've seen inflation hit pretty hard last year. But no, you have to go back a long time to see something of this nature, where oil would drop at a time in which fundamentals are pointing to stronger demand, and yet you see weakness. It does demonstrate that what's really happening here, Scott, in a nutshell, banks that are in trouble are now starting to take their positions, that is the oil that they've bought or the paper that they bought, and they're liquidating that to get cash in quickly so that they meet the regulators' obligations in an environment where people are saying, I want to take my money to the banks, the sky's falling. It looks like the banks are finally going to have to concentrate on fundamentals rather than what they've been doing for the past little while, woke capitalism and worrying about climate change. I think it's time that the world is going to have to get a grip and get real. And that starts with our lending institutions globally.
On Sunday night, I was watching the Academy Awards, and the Oscar for Best Picture went to Everything, Everywhere, All at Once. And I reference that because that seems to be what's happening in the energy markets, everything, everywhere, all at once. How do you wade through this as the average consumer and the layperson looking at all of this? How do you kind of make sense of what's going on?
You can't, because there's a lot coming at you at the same time. For the central banks of this world to reverse course just months after they said that there'd be no change in interest rate policies demonstrates to which, those in the position of authority, responsibility, and those in the know don't know. And if those who know or ought to know are absent, where does that leave average, ordinary individuals? Well, it's really a guessing game at this point, but there's no doubt the market is seized with panic and a frenzy, and that frenzy could lead to, unintended consequences. One, of course, is the dropping of the value of the price of energy, which, of course, on the surface is a good thing. We all want that. But if the reasons underlying it are a global economic recession, it doesn't matter what the price of gasoline is when you don't have a job.
And Dan, for those that may listen to this and think to themselves, well, Dan's being a little overreactionary here. I know you to be someone who's very pragmatic and really looks at the data and the numbers. But if there was that individual who perhaps thought to themselves, gosh, Dan's kind of being overreacting here and maybe, saying some things that are a maybe and won't happen, what would your response be?
Well, watch and see what happens, because already I think we're into the third or fourth inning of what looks like a major meltdown in global markets. And it does suggest that the markets are completely detached from what I think is a reality, where they're not looking at fundamentals of supply and demand. That's where they should be. And they're more focused on initiatives, on green, on decarbonization, net zero. All these are wonderful, fanciful ideas, but they don't put, food on the table. In fact, what they are doing is distorting and diverting the attention of policymakers and capital away from where it needs to be. And that's to ensure that we plug the gap. It doesn't matter where you are in this country. Everyone's dealing with shortages. That should not be. And so we have some pretty serious structural problems, and they have a lot to do with very poor public policy that isn't focused on the bottom line. And that's to make sure that Canada does its best at getting its resources to global markets, while at the same time continuing its responsible use of those revenues to pay for our infrastructure. And yes, be economically and environmentally responsible at the same time. It's not a hard thing to do, but I think we've seen ourselves move far too far into one direction. And that's wokeism, I think, has no business in the affairs of the nation when it wants to try to make ends meet.
There's certainly a lot to unpack in what we've talked about in the last few minutes. But other than those kind of red flag things that you've brought forward and talked about, what are some other things that are catching your eye and your ear in terms of global markets and what's happening geopolitically?
Yeah, I think we're going to be looking at a major correction in the markets to the upside. Not helping that, of course, will be here in Canada on April the 1st in 2 weeks. So today, passing the heights of March, we will be looking at April Fool's Day, in which we're treated to a pretty substantial increase in carbon taxes, which will run much higher than the rate of inflation. 2 weeks after that, we'll be looking at the switchover from winter to summer gasoline. That will add another 4 or 5 cents a liter. And then we will be speeding very quickly towards the implementation of the first stages of the Clean Fuel Standard, which over several years to 2030, as a second carbon tax, will add about 30 cents to the price of diesel and gasoline. And it will probably ruin our fuel mileage, because adding ethanol to gasoline, which is how many refineries are going to meet that emissions curb, are going to add a lot more of what doesn't burn as well as gasoline. So starting in July, you're going to notice that your mileage is going to start to take a hit. So it may not be a direct tax yet, but it's certainly going to be a tax. You're going to have to spend more to do the same kind of mileage you expected to do last year.
Dan, there's always so many things going on. That's why it's great to be able to chat with you once a week to kind of wade through some of this and to get down to the nitty gritty, as it were. But when you're not here with us on the SaltWire Network and Prices at the Pumps, where can folks reach out and find you?
Yeah, affordableenergy.ca. We have a website there. I'd love to have people come on board and come back and exchange some ideas with us there. We put a lot of blogs and information out there. Of course, the gas price prediction, always available at Gas Price Wizard on Twitter. And of course, commentary, which in which there's no holds barred. I don't believe in that. I don't want to hold back on what I'm doing. You have a government that doesn't like freedom. I do.
Dan, we appreciate your time as always. Enjoy the rest of your day. Have a wonderful weekend ahead. And we'll get together and do this again next week.
Thanks so much, Scott. Looking forward to it.
Thank you, Dan.